Good morning and welcome back to Almus Market Mornings. It's Friday the 13th and markets have already felt a hint of it overnight. Precious metals saw a sudden and sharp correction before stabilizing, amid speculation that Russia could reconsider the US dollar as a part of a broader economic understanding with President Trump. Others point to a wider cross asset sell off, potentially amplified by algorithmic trading as the real trigger. But for now, metals have steadied, but attention quickly shifts to the US inflation data later today, which could shape expectations for the Federal Reserve's next moves. Good morning, JK. What should markets be aware of today?
Good morning, Yashan. Yes, markets have had a fair bit of volatility yesterday. Almost every market was selling off at one point of time. The stock market obviously led the declines, with Nasdaq falling more than 2%. Then currencies followed. Then, of course, we had the commodities sliding. Gold and silver slid more than 3 to 4%. And even the crude oil had a fall of 3% yesterday. Kind of, one market leading the other. And what the market is watching is closely the developments in the tech sector of the market, where we are seeing increased concerns about spillover of AI development into the other tech companies, which are now getting some sort of a D-rating, and that is in fact also seen in the Indian tech stocks. So that's the main theme that was leading the market yesterday. Of course, after digesting the big beat in NFP on Wednesday, market is now awaiting the other important indicator, which is part of the Fed's mandate in their monetary policy. The CPI for January expected to inch up, by 0.3%, both in core and the headline, year on year, between 2.7 to from 2.7 to 2.5. Because that's kindly moderating there. So I think this number is going to be another, possible influence on the markets if there is a big deviation. Now, if you look at the stock market, has fallen below important support level, and it can slide much more. In the currencies, we have divergent moves. The commodity-based currencies have had a sharp correction yesterday as the commodities had a slide. Yen, once again held the 152 support, but looks very tentative. It can actually, see more strength after, this tepid bounce that we have seen, because the risk sentiment seems to be very brittle. Chinese yuan traded below 6.90 yesterday, and today Chinese central bank fixed the yuan midpoint at 6.9398, which was last fixed in several years back. And now, we have seen a steady decline in the Chinese yuan, along with this official fixing, which has come all the way from 7.25 to 6.93 now. And this is nothing but a correction in the overvaluation of Chinese yuan, about which possibly there is an understanding between US and China. And we are seeing this continuing possibly towards 6.80 and 6.70, because the official estimate from the bank for BIS actually shows that Chinese one is overvalued by about 10%. Of course, yen is seems overvalued by more than 25 to 30%. But the moves in yen are kind of politically driven, and there are mixed factors which are influencing the yen. So the moves in yen will not be as drastic as we have seen in the yuan so far. I think it will be gradual as far as the yen is concerned. But the focus is on these two currencies, and other currencies are likely to remain quite, range bound, as I would say. Of course, yesterday we had some data from UK, growth and industrial production, and both were quite tepid. So I think Chinese US dollar also strengthened against the GBP. GBP was also a casualty against the euro and the yen. Overall, looking some sort of a softness in the GBP. Euro is still steady, which is also now become kind of a safe haven currency whenever there is a market turbulence. So that is something that we'll be looking at. Now, if you look at the rupee, we are in a very narrow range. We are hearing about PSU banks active on both sides, below 90.40 as well as above 90.75. Lower side, I think national banks are buying for their own oil clients as well as possible government payments. And on the upside, they are selling just to contain further rupee falling towards 91, because a break of 91 can again trigger more weakness in the rupee. Meantime, India also released the CPI under the new series. For January 26, which showed that the inflation rose to 2.75 annualized basis as against 1.3% in December. And, this also is showing a big moderation in the food prices towards the upside. In fact, food prices rose in the positive side after being on the negative side for 7 months. Now, the major revision in the new CPI series is the recalibration of food and beverage weights, which now carry a weight of 34.77%. The combined weightage of these earlier were at 45.9%. So the retail food inflation, which seems to be very volatile, that influence is reduced as this series now includes many more components, which will balance out the inflation number and possibly keep the inflation number more representative according to the evolving consumption pattern, and also the online transactions or online purchases and prices are also being considered in this. So I think this is something that the market will keep watching how the inflation numbers evolve going forward. However, it is good to see we are not going further in the deflationary direction, and so long as it remains below 4% consistently, there is still chance that RBI reconsiders their monetary policy for another rate cut, depending upon how the growth also evolves. So rupee, in any case, is going to remain in a range, still observing how the global situation evolves with regard to the yen, yuan, and also the risk sentiment. Finally, there has been some media reports saying that US Russia is reaching an understanding about Russia moving into a dollar-based transaction. This is only some media are reporting this, and this is a very big development if it is confirmed. But actually, no official statement has been seen in this regard. So possibly there can be some economic cooperation with regard to the fossil fuels and exploration of investments into natural gas and offshore oil investments. Russia is possibly pushing for these some understanding with the US, with the intention of getting back a large amount of their dollar reserves, which has been frozen by the US. So this is a development that we will keep tracking. As of now, this doesn't have too many implications. Thank you.
Thank you, Jairam. So, and just to summarize, markets are closely watching the tech side of things in the equity markets that led to this broad asset sell-off. Currencies followed this, and then precious metals saw a sharp slide again at night, and that was the main theme that was leading the market yesterday. And US inflation numbers are expected to inch up today, and is an important print that could really influence the market and the Fed's decision for interest rate cuts. The Chinese yuan and the yen seem to be overvalued, as we can see the yuan continuously falling, but we won't see such a big fall in the yen as it is more politically driven than the yuan. And when it comes to the euro, it is stable for now as it's slowly gaining the status of the safe haven currency when markets remain volatile. And when it comes to USD INR, we still remain range bound as buying from oil companies is still sustaining on the lower side, and a break of 90.80 could see a bigger move on the upside to test 91 again. Thank you all so much for listening, and we'll catch up tomorrow with the fresh random updates.